Stockradar stocks on the move. Today's date is the 2nd of September 2021. A lovely spring day in Melbourne, 26 degrees, just the way we like it, but it probably won't last that long, so we'll just enjoy it while we can. What do? I identify developing trends and apply each opportunity. Or to put it differently, I ride the waves to surfing nirvana. And sometimes they don't break, so we go back out and we get another one. In trading tactics, I'm going to take you back to the basics. Run the ones that work and cap the ones that don't. It's that simple. Okay, my name is Richard Lee and I manage the stockradar.com.au website for you. We educate investors on price analysis, risk management, systems, behavioural analysis, processes, trading models and portfolios. All these areas are explored on the website for you to have a look at, or through the YouTube videos or through my newsletter, all those sort of avenues of information for you. Okay, our format for the day, as usual, is to go through the overseas markets, look at the ASX 200, check out the portfolio, some ASX stocks, and in trading tactics today, I'm just going to talk about trends, and all trends are opportunities, and we'll look into that just briefly, and so you can see a little bit about what I do and why I do that. Okay, so firstly, let's get to the markets. Okay, and finally, we go straight to the Dow Jones. Eerie acceptance is what I thought about this morning. This market just keeps going up and we get used to it, we worry about it, but still it keeps going up. The trend is steady, the volume is fine. The acceleration slowed a little bit on the Dow, but it's still going up, so I'm not too worried about this at the moment. So that keeps going up. The Nasdaq has also been piling on the gains and it's making new highs again. And you know, you can see the momentum down here. It may not be that exciting to you, but it's steady, which means it's a steady trend up. It's well above zero, and this just keeps moving higher and higher. So all we can do is follow it because we don't know really where it's going to go. There's no reason for us at this stage to think about the market coming back. Okay, commodities, Brent crude. It's having a bit of trouble up at the highs there. We see this up around $80. We can say I've marked it in a big red line there. It's a sort of a long-term resistance level. Going back a few years, back to sort of 2018, and we had this big rally this year, but it has come under pressure this year. We've now got sort of one, two, maybe three lower peaks here. You can see the volume, see the sellers are here, and the momentum is slowing. So it's really at the moment, there's a problem up at the highs there. It's trying an upside swing at the moment, but really it seems to me like the sellers are still dominating this market. So I don't see a lot of gains going there for the moment, unless it can get through R1. If it does, I might change my view, but from the moment, not. Copper's similar picture. We've got these lower highs occurring here. It keeps trying to do a rally off S1, but nothing really exciting is happening here. So I'm just letting this one play out for the moment. The lower high we've got there's a bit of a worry. There's selling pressure on S1. So we'll just keep an eye on that one for the moment. But for the moment, stay neutral. Gold, I'm also staying neutral. So all the commodities are a little bit off the boil, aren't they? So gold, it's still the same picture. I don't want to waste too much time on that one. It's just neutral at the moment with no real guidance. Now, if we also just go to our gold price itself, it's being okay. It's trying to rally at the moment, probably through weakness in the Australian dollar, rather than anything significant happening in the actual gold price. So that's struggling a bit, but our gold index itself, if we have a quick look at that, that's also saying at the moment it's certainly struggling to make any gains there. You know, it's down here. There's lower highs, pushing into this level here. So it's probably going to head back to the support level at S1 for the moment. So that's why the gold stocks aren't performing too well. Okay, now to the ASX 200. It's been a real beauty. It just keeps going up, a bit like the Dow, a bit like the Nasdaq. Eerie acceptance of this rally is really weird, but it's going on and it keeps going higher. And we've now got a whole pile of money coming back into the market through the dividends, and that's going to provide support to any pullbacks. So at this stage, apart from a slight easing of the commodity sector and the resources, we've seen BHP come off and Rio and Fortescue. Even though we've had good dividend announcements, there's a little bit of resistance in those prices there at the moment. So we're looking at some other sectors, and I'll go through some stocks a bit later on for you. But the ASX 200 looks okay. It's made new highs. It's up 58% from just over a year ago, and there's a momentum index down the bottom here. You can see it's just very, very steady, flat, but well above zero means the trend is steady. Okay, the portfolio was down 1 to 79 stocks this week of 189 covered. The portfolios are full again, 5 out of 5, 10 out of 10. Conservative portfolio 6 at 6 out of 20, and just motors along. In the sectors, we've got property, banks and industrial materials boringly at the top still, but that's where they are, and they keep going. And the portfolio, the building of portfolios come back a little bit since March. In the frothy stages of this market, it was up around 13%. It's now come back to about 9% since March, and we might have a look at that in the next week or two to see how that's looking. Okay, next stock we're going to go for is JB Hi-Fi, which is the one I'm sort of looking at from an educational basis at the moment, so we can just follow it a bit, and you can see what my thinking is. At the moment, you can see this pattern here. We've been stuck in this indecision pattern, but we've also seen last week we saw a bit of a sell-off down here. So there's certainly some pressure coming on the downside, and this S1 level here has not been responding to good news. We've now got this lower high situation. We had this resistance area up here for around $53. It's now had a little top out at $50, which is not such a good sign, and now we're pressuring the downside. Bit of volume appearing, and the MACD sagging below zero. So watch out for JB Hi-Fi, or rather just stay neutral on that one. Momentum, I keep talking about momentum. I love momentum. I'm just watching Iris at the moment. It's been a strange one. We bought this pretty high, but it's still gone higher. So what I want to look at here, momentum, we try and look at momentum and try and assess whether this is going to continue. Is there strong momentum? When I look at the Iris chart here, after this breakout of this big downtrend here, we saw a big impulse move up, a drifting move, no real aggressive selling, another big impulse move up, and now we're getting another drifting move, no aggressive selling down here. If I just wind this volume up a little bit for you, you can see there's no real aggressive selling. Most of the green bars represent price moves up, so the buyers are actually controlling this at the moment. So the momentum still looks good. The price action is performing properly. It's made new highs. Trend intensity rating is 10. So this is still looking like a pretty good hold to me at the moment. Still good momentum in there. We've still got a good chance for another kick higher on this one. But again, always protect with your stop loss. Okay. Right, Domino's is another one that's just gone crazy. Again, I talked about expensive last week. Well, was Domino's expensive at $110 in May? Well, maybe it was, but compared to being $150 now in September, it's not really expensive. So don't worry too much about those price levels, because they are only price levels. So back in April, DMP was a $100 stock. Today is a $150 stock, a 33% increase. That's the power of momentum. If we can get into those moves, that's what helps us make good money and fast. So just to blow this up a little bit here, we can see there's this huge move. It's really just, your indicators don't matter too much. They're too far away. Moving average, the volume and the MACD still tell you there's lots of buying, there's lots of crowd behaviour behind this one, and it's still moving up. So it's really just a matter of raising your stop profit in this situation to make sure you capitalise on this powerful momentum move. So Domino's has been a beauty. As has Iris, as has Aristocrat. Another one which has just driven up for the last year. It's been very, very steady. And just put that down a little bit. So you can see here we had a trend reversal back here about $27 above the average, a trend reversal, a little bit of volume here. The MACD gets on board. So this probably started with a trend intensity rating of around 6, as is very common with trend reversals coming off a low base. The MACD is often not on board, and the signals aren't flashing green. But they now are, because we've now seen an extensive trend which held up for over a year now, and it's now up 64%, and there's been no reason to sell this stock throughout this whole period. Bit of a chop around here, but the stop still held. So we got high highs and high lows, and then we get a new high here, so we just lift the stop, and this has really been a very good stock here. We've also getting a bit more volume here, interestingly, in this last little push up higher since the result, and the momentum is very strong. So Aristocrat still can still go a lot further, I would have thought. Anyway, protect your position with a stop profit, and that's what we do. We identify trends, we watch them develop, and we just follow them. Some work, some don't, and those that don't, we get out of them and we move on. Okay, so that's Aristocrat. Washington sold Patterson. We bought this one, we entered this one back in March this year, and we've had a bit of a tough time because it rallied well, it came back. We had a good spike up again, it came back again. We've now got a higher low, which is a good sign, and it's busted higher again on good volume. So all this selling here pressured the stock, but the buyers have absorbed this because there's not a lot of price move down. There's nothing significant. And then the buyers have now come back in and swamped those sellers and pushed them aside. And the momentum's just ticking higher as well, and it's above the average. So Washington sold Patterson is actually looking pretty good at the moment. So there's a sort of, okay, so that's Washington sold Patterson, sorry. Suncorp, I just want to mention this one because we looked at this one a couple of weeks ago, and it's been it actually jumped, I think, pretty quickly just after, as we were speaking. But I just wanted to comment on what we've got here, this move up here. There's about 4 weeks sitting up here like a little island. Now, potentially what they call as island reversals. It doesn't bother me too much. What I see is buying, holding this price up. Okay, so at this stage here, with the volume and momentum and being above the average, this is still looking very positive to me. And as the sellers are not hitting this stock, that's a good sign for me at the moment. Trend intensity rating is 9, and it's doing very well. Suncorp, just a very slow but steady riser. Okay, another interesting one we've got on board. This is a new entry for me, corporate travel. It took a while to reverse its big downtrend that it had there for a while. So you can see from here we came down from up here, but just above $30. And we've come back down. It rallied, it created a trend reversal. We did get stopped out back here, but then it's gone on to create one of these sideways patterns with the buyer. So the buyer's pushing hard at this, and the sellers are sitting there. And then we've got an even tighter range here over the last couple of months, which is finally broken out of. A bit of volume here, positive momentum still. So the rating is actually 10, believe it or not, which is a strange one because we sort of looked like it was very compact there, but everything's gone well. It's broken out, it's above the average, volume is expanding, and momentum is positive. So corporate travel, you know, it's in that market that's pretty volatile at the moment, but for the moment the buyers are prepared to support it and they're pushing it higher. And R1 is probably the next resistance, which is those old highs up above $30. So corporate travel is an interesting one. Again, look after it, protect it with your profit, with your stop profit. BHP, I just want to mention this briefly. We got out of this a couple of weeks ago. We again had this similar sort of pattern here. Sometimes they don't work out. And when they don't work out, you've just got to do the right thing. We played the odds here and we lost, but we did come out of this stock here okay. We've actually ended up with about a 12% profit when we take our dividend, and that's okay. It just didn't quite work out, but it's okay. And the risk has come onto the stock now. So as the risk has come onto this stock with commodities, Rio, Fortescue, some of those stocks, just easing back a little bit. Trend intensity has dropped to 5. This has been a big drop here. It fell through this support level, the moving average, and this recent low here, which sort of suggests to me a little bit of nerves. Risk on, turn neutral, stand aside, take your profit and move on. So that's BHP, and that's where I stand there on BHP at the moment. And you can see these things here. This is sagging pretty badly. So it's just a little bit of a going towards a 50-50 rather than a 70-30 sort of probability. So that's what we've done with BHP. I mentioned to you Stockradar last week. Boy, what a ride we've had since over the last week. Up to 16.50, I think, as I was speaking to you last week. It's been back down to around just above $12. It's now $13.40. You may have read the articles from David Dicker. He has sold 1.6% of his holding, a very small part of it, to add to his car collection and to start trading new equities. So he's an interesting guy, but he tells it like it is. And this stock really is, considering where we started August at about $12, it's $13.40, so it's actually well up on the month. So despite all this hoo-ha that's been going on, don't worry about Stockradar too much at the moment. It's okay. Then one other one I want to look at, which I've covered a couple of times in the newsletter over the last year or so, because it's been a very interesting stock. My daughter buys jewellery from there, so I sort of understand the attraction. There's a lot of people buy they've got a good spot in the market, Nirvana, and they appeal to a lot of people. So it's a trend intensity rating of 10, but we did have this reversal back here late last year. We had a jump up, a little corrective pattern, so impulse, drift, impulse, drift, impulse. This is the type of pattern we want to see for momentum moves, and it's now making new highs up around $20 from being around $8 in October, and the trend intensity rating is 10. So all these things that are occurring, the trend reversal, the trend, the new high, are all positives for the stock, and the probabilities are that this was going to go higher. So that's just Nirvana, one of the smaller stocks that I cover, that I've had a look at over the last year or so in the newsletter. Okay, so that's the stocks I wanted to show today. A bit of momentum there, some of those new highs, a new entry. So they're all very interesting. So now what I want to go to is trading tactics. And I did talk about briefly what I was going to do today. Talk about trends. Really, I don't know, but we always see them. Trends occur all the time in the market, but capitalising on them, making money out of them, seems to be an elusive target. It requires a lot of discipline and a lot of structure and a lot of control around what you're doing, and a good management of your expectations of actually what can be achieved. A bit like the BHP trade, we still made 12% in that. We weren't in it for very long. Annualised it out, it was probably a 20% trade, but it didn't quite work out. But still, that's okay. That's the way it is. So trends that occur, we trade them all the time. So they're high odds. Once a trend is developed, I'm waiting for that confirmation for it to develop before I jump on board. So I'm jumping on board when there's a high odds chance of it going higher. Trends occur, or waves occur frequently. All the time we see them in the market. Okay? And they sit there and stare us in the face and frustrate us sometimes. But they all develop in a similar way, but never the same. The structure is usually the same, but the detail is different. So that's why getting too close to the market is a dangerous thing. That's why I look at weekly charts. It gives me a chance to step back and get an overall view, not too concerned by week-to-week moves or day-to-day moves, but look at the general picture. And if I do that, I'm far better off in identifying, because identifying it is the most important part of it. Okay, so they're also very easy to jump on and jump off. As retail investors, we can get in and out. We're not like institutions who've got huge holdings and just have to cut their weightings or lift their weightings. We can actually get in and out. So that's why I love trends. Every trend is an opportunity. When a wave is building, it is a hard force to stop. And we've seen with Domino's, we've seen with Aristocrat, we've seen with Irish, when these things want to move, they just bulldoze their way through, no matter what valuations are, no matter what people think. Once the crowd behaviour gets behind a stock, it moves it. It's then a matter of trying to work out that time when to get out. So we run them, we ride them, we follow them, and we have a lot of fun doing it. Okay, but we do it with an engagement plan. Okay, and the engagement plan consists of an entry and an exit and all the controls that I have around those sorts of things. And that's the key thing. So don't worry about tops and bottoms, just worry about taking a good chunk of the trend, and taming those waves is what we need to do. Okay, so for trends, if you're looking for these opportunities, to take these opportunities, keep it as simple and clear and as focused as you can. Like this guy here, he knows what he wants. It's a single focus, and that's what it is. So in this world, I run them or I cap them, and that's the way it's got to be. Okay, so that's a little bit about trends and just about how I look at them. You know, it's a matter of how can I we see them all the time, how can I make money out of them? And that's what I do. Okay, so every developing trend I see is an opportunity, because history and experience tells us what's most likely to happen next. Okay, in a trend, it's likely to be higher next week than it is this week, and that will be true for the most part. It's there for you to watch, observe, absorb, and see it happen again and again. And once you've done that, you get comfortable planning and identifying and jumping on board and taking the ride and hopping off at any time of your choosing, be it a small loss or a big win. Either way, you are a winner. Okay, thanks very much for listening today. Good luck for the trading week. I hope you all learned something today, and I will see you all next week. Thank you.